Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're going to be taking a much closer look at Bollinger Band trading. We're actually going to be combining 3 Bollinger Band studies into one example trade system. I think this is going to be a different view of a very popular study for just about everybody watching. So really looking forward to this one. Before we can get to any of that, though, let me first of all say hello to everybody chatting in out there in YouTube. Great to see all the familiar names. Hello there, Jay Richardson, Chris B, Sharon, David, Scott, JDLMI, Will, BJ, everybody else. Thanks for joining us week after week. We always appreciate your attendance and your contributions to these discussions. If you happen to be here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream has concluded, watching those recordings is a great way to watch these live stream or these webcasts. But if you'd like to be here in the live stream, this is a Friday webcast series. We kick things off promptly at 1 Eastern. So you can join us right here on the channel. Now, I also want to let my live stream attendees know that my very good friend, Scott Thompson, is hanging out in the chats with us. Scott's going to be keeping an eye on the questions that come in, and if I can't get to those, he's going to be picking up Slack for me there. Scott and I have now been working together for, it's been more than 20 years, hasn't it, Scott? So yeah, Scott brings a ton of experience to this discussion. Thanks for having my back, Scott. I also want to give an invitation to give us a follow on social media. You really should be following your favorite Schwab presenters there on social media. You can find Scott and me on X. You can follow Scott there if you like, at Scott Thompson CS. You can follow me on X at Cameron May CS. Now you can also, as of very recently, follow me on LinkedIn. Just go to linkedin.com/in and then /Cameron May CS will take you to my profile. You can give me a follow there. But let's get into this discussion. I have a lot planned. I think this is going to be a good one. But before we do that, we first of all, of course, have to consider the risks associated with trading. This is important information, so bear it in mind. This material is intended for general informational and educational purposes only. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including the loss of principal. All right, so with that said, let's set the agenda for today's discussion. The first thing that we're going to do, as we always do, is revisit current positions in our example paper money portfolio. We have 3 right now. We left off last week with 5. That means 2 have concluded. Let me give you a little spoiler alert. It wasn't pretty. So we're going to have a look at what happened with those, see what's going on with our current 3 positions. Then we're going to look at what's going on with the markets through our trend value momentum strategy set that we use each week. And then we're going to have this discussion of Bollinger Bands. What we're going to be trying to do is solve a big problem for Bollinger Band traders, and that is, what is a legitimate squeeze and what's sort of a false signal? Well, actually, the creator of the Bollinger Band had a definition for that. So we're going to be using a combination of 3 Bollinger Band studies to look for what might be considered by some to be authentic or legitimate squeezes. And we're going to be running a scan for those types of squeezes and planning and placing an example trade. That's a lot. So let's get to it. Let's go right to our Thinkorswim desktop. And here are our current positions. Let's go through those. So GE, we have 100 shares. These have had a nasty reversal of fortune in the last week. Let's see what's going on. With General Electric, this was entered on the evidence of a weekly and daily PPO crossover signal. So we took the position right here, and for the first couple of weeks, this was going quite well. It started to kind of chop sideways. We're still waiting on a crossover, and in the meantime, we had an earnings announcement that wasn't received terribly well by shareholders, apparently, and price has fallen. We're not quite at crossover. This might look like it's crossing over. We can actually point at the indicator and look up here at the numbers in the upper left. What we're looking for to confirm a crossover is to see the green number slip below the red number. So if I point at that, looks like 542 in green, 534 in red. That is not a bearish crossover just yet. Now, obviously, not everybody watching this webcast or this live stream right now. We got 170 live stream attendees at this moment. We'll pick up more as we go, but we'll also probably have hundreds or thousands more that watch after the live stream is concluded. not everybody even knows what the weekly and daily PPO is. So if you want to revisit the logic of previous trades and learn these indicators, make sure that you're subscribed to our Trader Talks channel, because that's where you can find the webcasts that we've done in the past. So yeah, Trader Talks Schwab Coaching Webcasts is the channel. You can subscribe just by clicking on the subscribe button down below the video right now. It doesn't cost anything to do that. It only takes a second to click and it's done. But this is where you can join our live streams. You can also find our playlists of previous webcasts. These are organized by series. So this series is Advanced Charting Techniques. So if I go to playlists and then just scroll down about halfway, right here, Advanced Charting Techniques, I can go to View Full Playlist, and I can look for the weekly and daily PPO indicator in those previous webcasts and watch that. All right, but back to our trades. This one, we're still waiting on that bearish crossover. Underwater right now. Hopefully, this GE can pull out of its tailspin and get going back up again, but not a signal just yet, although it looks like it might be imminent. We'll see. Next up is Intel. We have 50 remaining shares. We've actually sold 50 shares for a profit already, and the remaining 50 shares aren't doing as well. Still up $284 though, so here's the trade there. The trade logic of this was, and actually let's load up the correct study set. Let's go to the Intel 200 triangular moving average plus the true strength index. Here we were looking at the price to be above our 200 period triangular moving average and a bullish crossover on the Truth Strength Index. We got that here, and we're waiting for a bearish crossover. Getting close, not there yet. Another earnings announcement though. Bang, this is something the trader might want to keep an eye on if they don't like to hold over earnings. Maybe they have it in their plan to exit, even if we don't have an exit signal on our chart. We're still waiting for those signals though. But what I thought we might do here now is Intel has had such a nice run up. Even with this pullback, we're still sitting above previous highs. And sometimes a technical assumption is that previous highs or resistance levels, once broken, might be new support levels. So how about while we're waiting for this crossover, let's move our stop up on our remaining 50 shares. So we already closed out 50 shares for about an $8 profit. That's $400 across the 50 shares. Let's click and drag that up, not up to the breakout point, but maybe just down below that. How about we position that? What if we go for about 41.50? There we go. Let's move our stop up. Canceling, replacing that, moving it up to the 41.50 level, and let's send that off. So move that stop. We're still above that level. We'll see. Let's go on with our current positions. We have McKesson. So here's the McKesson trade. With this one, we were trading, well, let me just bring it up here. Load up the McKesson zigzag high-low indicator. So as we're watching the zigzag high-low zigging and zagging, we bought on this bullish signal, waiting for a bearish, what I would call a zag. That's just sort of my terminology for labeling the bullish signals as zigs and the bearish signals as zags. We don't have one yet. So this is pretty close to a break-even trade at the moment. We'll see where it goes from here. Look at that, up 10 bucks total across a very small position. We dialed this up and started spending more money on these positions more recently. Notice 100 shares at $300. We committed $30,000 to this trade. This one we're only in it for 5,000. So that's it for current positions, but we had two others. Here's what happened to the other two. They got stopped out. Let's look at our JPM. JP Morgan, let's load up our study set. This was the bullish pullback, looking for a bounce that we discussed last week where we built a scan for bounces. Well, it did its job and found one. It just didn't work out. In this case, we had to stop just below our upward sloping trend line, and we got stopped out. The stock attempted a near-term rally, and it's then continuing to sell. So in this case, it looks like this trader might have done themselves a favor, stopping their losses at a $10 per share loss. $650 on 65 total shares traded. So that was our JPM trade. And finally, we had Tesla. Another one got stopped out. This one is a little bit more brutal in hindsight. Let me bring up the Tesla study set. This was a rate of change oscillator plus the, if we go back to the study, I did that a little bit too quickly. I want you to be able to see this. Rate of change oscillator plus the 50 and 200 exponential moving averages for short-term and longer-term trends. We were looking for the 50 to still be above the 200, and it was. We were looking for the rate of change oscillator to get below the zero line, below minus 10, and then start to turn up, which it did. So we took an entry right here, place a stop below those previous lows, a pretty tight stop. And this is one of the dangers of tight stops. Sometimes we get exactly this. How many of you had this happen before? We feel like not taking much risk, so we use a tight stop and we think that we're doing ourselves a favor there. And sometimes we can be, because if we fall down, get stopped, and it continues to fall, we've minimized that risk. On the other hand, if we get stopped out and the price reverses course, and we were just a little bit premature in our entry, we might be left standing on the curb as everybody takes off and parties without us. And that looks like that may be, at least right now, the case. Notice this little bit of wiggle room we gave it. It wiggled right down there, stopped us out, done. $1,384 loss realized. This is a paper money trade, of course. But now it's reversing. Of course, there's an earnings announcement coming up. There we go. We'll see. But that one's done. That one's done. So it leaves us with 3 positions. So let's take a look at what's going on with the markets. I'm going to load that up. Let's get the study set up here, but then I'm going to hit the pause button on my presentation to tell you something. So let me go up here to our studies. Let's load up our trend, value, momentum, our TVM strategy set. And here I'm going to pause because I see that there's been a survey link that's been added to the chat window for the live attendees. So if you're here in the live audience, if you do me a favor, click on that survey link and then fill that survey out when the just fill it out when the webcast is over. You can give me some honest feedback. It's definitely appreciated. It always helps. It's a really short survey, plus a comments box and a suggestion box. So if you take the time to fill that out, I will take the time to read through the data. I read through the comments. Those get sent right to me, and it's always helpful. All right. True Nice says, wouldn't profit or loss percentage be a better indicator of how well the trade went or how poorly it went? It's up to the trader's preference. But yeah, to do a comparison from one trade to the next, like you'll notice here, I put in dollar amounts. Lost $650 on one, lost $1,800 on the other. It sounds like one was disastrous and the other one took 3 times the loss. It's true in dollar amounts, but maybe as a percentage, it might have been less. In this case, it really wasn't. But yeah, percentages can standardize that comparison across a range of trades. So not a bad idea there. But what's going on with the S&P 500? How do the markets look? They're trading a percentage point below all-time highs. Yeah, the bullish markets appear to still be intact. We could turn from here, but for a TVM trader, a trend value momentum trader, they might look at trend. Well, the 50 triangular moving average is still above the 100. That might be a confirmation of continued bullishness. Don't know that's really necessary right now, but sometimes it can get a little bit muddier when we're trying to make those determinations. Our value indicator, RSI, it actually just dipped down right close to the overvalued range. Even with just this little bit of a dip, that's still as low as we've been in some time. And so maybe in the near term, for traders who have been just looking for any kind of a window of opportunity to get in at lower prices, maybe there was that window. And now those things we're starting to see a strengthening of the RSI again. That could still be looked at as bullish. So we have bullish here, and just within the last 48 hours, we've seen our momentum oscillator, in this case, the MACD histogram, dip down, go to bright red. Let me zoom in on this a little bit so we can see these bright red histogram bars sticking down further and further, and then we transitioned to darker red, which might mean for a momentum trader that the bears or the sellers had momentum, but that momentum, they're kind of losing their grip. That's a typical interpretation of this. So that could also be seen as bullish. So kind of check, check, check for the bulls. Today we're going to do another bullish trade. As a result, it's not a guarantee of performance, but for a TVM trader using this to get context with what's going on with the broader markets, maybe it looks like just continued bullishness. All right, so let's do some Bollinger Band trading. Now, Bollinger Bands, I can show you what a Bollinger Band is. Not a lot of people are going to be impressed by that sort of display of knowledge because a lot of you already know what they are. But I do want to talk about a common issue with trading Bollinger Bands and how it might be potentially addressed by using a couple of other different Bollinger Band studies. So let's do it. Let's come over here. I'm going to use CVS as our example stock today. I actually found this using a scan that we're going to be building in this webcast. So I'll show you how that scan is built. I'll try to remember to share it with you so it can kind of save you a little bit of time. But in any case, let's clear off the current set of studies, remove all the studies, and let's add the Bollinger Bands. So we're going to type in BOLL for Bollinger Bands. Right now, we're just doing the plain Bollinger Bands, but just as a spoiler alert, we're going to be getting into Bollinger Bandwidth and Bollinger Percent B. As I mentioned those, chat in, let me know. Have you ever used, or let's just say, are you familiar with Bollinger Bandwidth and Bollinger Percent B? Chat in just a yes or a no if you would. But let's click Add, Selected. By the way, if you're watching on the archive, you can even leave a comment with a yes or a no. And as we dive into the Bollinger Bands, just a quick high-level overview of the Bollinger Bands. I do want to talk briefly about how they're constructed and what they're trying to address for a trader. But before we apply those, actually, let's apply those to the chart. But before we shut this pop-up off, I want to talk about the inner workings of the Bollinger Band. So looks like we have, Paul says yes to all the above. I'm seeing a lot of no's, a lot of yeses. Scott says, I use them when they get close to boundaries. Yep, Scott, that's what we're going to be talking about today. Great. All right. So it looks like mostly no. The last 6 replies, as a matter of fact, have been no, 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 no. But let's talk about just a traditional Bollinger Band. So a Bollinger Band is an effort, first of all, to identify trend, and then secondarily to identify departures from that trend. How far up does price typically go as it goes above our identified trend? How far does it typically fall below before it sort of hits bottoms on from our departure from our trend? And for that, what the trader's really trying to do there maybe is identify the relative volatility, looking for periods of calm, and maybe using those periods of calm as a setup for new explosive moves in one direction or the other. But basically, to identify trend, traditionally we use a 20-period simple moving average. So that's what the 20 and the simple mean. And then to define the upper and lower ranges in how far price typically moves away from the trend before it comes back, we use standard deviations. A positive standard, 2 standard deviations to the upside, 2 standard deviations to the downside. That's our +2 and our -2. And what this net does is it captures about 98% of the price activity around a trend line. That's it. So as we just set that as the backdrop for our Bollinger Band, this is what we're left with. So our green line is our 20-period simple moving average. That's identified as potential trend, and right now it looks like our trend is up. And then we have an upper band and a lower band. The upper band is 2 standard deviations above the trend line. Lower band is 2 standard deviations below the trend line. And it's actually the interaction of those bands that Bollinger Band traders might use to generate entry signals. And specifically, let me just throw this out there. Before I say it, I want you to type it in. What's possibly the most commonly used signal? What is the event with Bollinger Bands that Bollinger Band traders are commonly looking for? It has a title. It's a one-word title. You know what I'm talking about? You Bollinger Band traders, type it in. Yeah, squeeze is what the trader might be looking for. So a squeeze is when our upper band comes downward and our lower band comes upward. What that means is that the stock just isn't traveling as far away from the trend line as much. It literally means that volatility is going down, and the range that we have to draw in order to capture 98% of trading is narrower and narrower and narrower. So when things get quiet like that, when they squeeze like that, for some traders, that can be the calm before the storm. Sometimes there's a bullish storm resulting from that calm period. Other times there's a bearish storm, and we might trade accordingly in either case. But Bollinger Band traders, yeah, it looks like, all right, Sandeep says squeeze, Jim squeeze, who is that, Rowan? Yep, or Ron, not Rowan. Squeeze, Ron Edwards. Omkar, James, Sharon, Janelle, thank you. Yes. So Bollinger Band traders are constantly on the lookout. Many of them are looking for these things called squeezes. The problem here is squeezes happen all the time, and a lot of them don't work out. So here's a squeeze right here. This one's a pretty prominent squeeze. As a matter of fact, let me clean up my chart here. This is just an old oval right there. I'm just going to just clear any drawings that happen to be on the chart. So we can start with a nice clean chart. But here is a possible squeeze where our two lines come together toward the trend line. Here's a possible squeeze. Here's a possible squeeze. It's not as prominent. Here's a possible squeeze right there. Here's a possible squeeze right there. Here's, you know what? There was another one right here. There was another one right here. You can see what I'm talking about. They happen all the time. So this is an indicator. Let me clear the drawing set off again. But this is an indicator. It was created by John Bollinger of Bollinger Band fame. Yeah. So John actually had an explicit definition of what is a valid squeeze and what is sort of an inconsequential squeeze. Did you know that? If you know that, give me the definition. It's not a challenge, it's an invitation. Yeah, Paul says that can be signal noise. So how do we maybe filter out that noise? Well, according to John Bollinger, a legitimate squeeze is when the volatility is at its lowest level in at least the last 6 months. So that can give us a pretty precise definition, but it's not very easy still to spot. All right, now that I know the definition, if I see a squeeze here, is this the narrowest squeeze in the last 6 months? It looks like it might be. Maybe this one back here is competition for that, though. So wouldn't it be nice if we just had an indicator that shows us that? And we do. Yeah, Eric says the term squeeze is squishy. Exactly. Yeah, so let's come up here, and I'm going to add a second indicator. So we're going to type in Bollinger again. It's intended to be a companion with the Bollinger Bands, and it's the Bollinger Bandwidth. So I'm going to add that to our chart. Now notice it's using the same parameters, 20, -2, and 2, but it has these two other values, 150 and 150. Now what this is referring to is the number of price bars that are used in the construction of the indicator. It's looking back about 6 months. I'm going to nitpick with that because 150 trading days is actually a little bit more than 6 months. It's making a stronger requirement than John Bollinger said. So I am going to make one modification here. If we apply this to our chart, that's its current construction. I'm going to make a tiny modification here, but it's significant, at least in my estimation. If we click on the little gear here, I'm going to change what's called the bulge and the squeeze lengths. Those just refer to the lines here that you're seeing on our chart, to 126. Why am I putting in 126? Well, because on average, there are 252 trading days in a year. Half of that, or 6 months, is 126 days. Right? So let's click OK, and let's click Apply. And what we're seeing now is 3 lines. So we have a top line, it's referred to the bulge. We have the bottom line, which is referred to the squeeze. That's also names that some people call the upper and lower bands. I don't know if you knew that, but the top line is sometimes referred to as the sort of the bulge envelope, and this one's the squeeze envelope. But in any case, but then we also have this green line, which is the Bollinger Bandwidth line. And really what the Bollinger Bandwidth is doing Bollinger Bandwidth is a good title. It's actually just telling us the width between the two lines, the bulge and the squeeze. And then it keeps a visual reference point. This dashed line above is the highest point. It's the highest bulge point, or in other words, it's the highest bulge that we've gotten in the width of the bands. So really a more accurate way to say this, if you want to think about it this way, you might refer to this as a bulge, where we have a wide spread between the upper and lower band. And when we have a narrow spread between the upper and lower band, we call that a squeeze. Okay? So this is kind of the bulge line up here. And this just tells us where has been what's sort of the benchmark for the widest it has been. In other words, how high does this line need to get in order to achieve the widest spread between the two lines? Or what's the narrowest spread? That's displayed right down here. So the green line is just an oscillating value of the width of the Bollinger Band envelopes. So sometimes it's pretty wide, like it is here. Sometimes it's pretty narrow, like it is right there. But what we're looking for that to do, if we're playing by John Bollinger's rules, is to look for the current bandwidth, the spread between those two Bollinger lines, to be at its lowest level, hitting the squeeze down here at the bottom. If this green line is down and equal to the dashed line, that literally means that in the last 126 trading days, as we've constructed this indicator, this is the narrowest squeeze we've had. That's a nice thing to have a hard definition of right down there. So when we get, like, look at this squeeze here. There's a squeeze. Would John Bollinger have defined this as a valid squeeze? Well, the width of the bands at that time was not at its lowest level in the last 6 months. So no, that would not be considered to be valid. This one, ooh, that one would have. Interesting. So that one would be a valid entry signal for a bear, however they intend to trade. But that would be a bearish signal. So this combination can add up to the setup for a bullish or a bearish trade. But what's the entry? For those of you who are familiar with an entry for a Bollinger Band, so we've identified a squeeze, and we've actually qualified it according to John Bollinger's. I almost called him John Bollinger Band in my haste. Anyway, that's just the setup to see this green line fall down to the lower dashed line, fall down to the squeeze level. What's the signal? Well, a signal is typically for price to subsequently break either above the upper band or below the lower band. So in this case, let's go back to this example. We have our bandwidth coming down to its lowest levels in the last 6 months. There's your setup. What's the entry point? Well, for a bear, it would be a break outside the lower band. True deny, is this helping? Good, excellent. Now, we could actually just observe this, but I'm going to bring in a second tool that's going to help us out with identifying these breakouts. So the first tool helps us with a setup. The second tool can help us with a breakout. And Sandeep says, can Bollinger Bands and Bollinger Band width be applied in intraday situations? So shorter and longer term time frames? Yes, conceptually they can be. Yep. Just like most technical approaches can be applied to different time frames, but of course, as always, regardless of the time frame, no technical approach is a guarantee of performance, right? All right, so I'm going to bring in a second Bollinger Band tool. Let's go up here. Let's type in BOLL, and this is where our Bollinger %B is going to be used. Let's add that to our chart. Notice same construction. Let's click apply and click OK. And what is this telling us? Well, this is telling us what we have here are 3 horizontal lines and then some histogram bars. The 3 horizontal lines go from 0 to 100 with a 50 in the middle. And really what that is that's kind of a different representation of the Bollinger Band lines plus the moving average. And this is a percentage. What it's specifically showing us is, where is price? Let me zoom in a little bit here. Where is price right now as a percentage of our Bollinger Bands? So if we happen to be right down at the lower band, we'd say that it's at the 0 line. The upper band is the 100 line. So this is 0%, this is 100%. The moving average is 50%. So if our price were right down close to this, it would have a value on this indicator close to 0. If we're down below the lower band, we will get negative values. Let's see if we can find one. There's one right there. See how price is down below that lower band? So it has a negative value. If it's above the upper band, it has a over 100 value. So in this case, the Bollinger percent B, it was at 113%, or in other words, price was basically 13% above the upper band. So that's what this does. You might think, well, what good does that do for us? Well, the nice thing about this is these indicators are scannable. So it allows us to scan for squeezes and to scan for entry signals. So that's what we're going to do. But before we do, let's talk about exit signals as well. And guess what? John Bollinger had an intended exit signal that actually didn't use a Bollinger Band. That's kind of strange. But yeah, here's a common exit signal that was used by John Bollinger himself, and that was to use the parabolic SAR. Now, some of you aren't familiar with parabolic SAR. We've covered it in good detail in a previous webcast, but I'm going to add that to our chart. Let's type in parabolic for parabolic SAR, add that to our chart, click apply, and click OK. But if you're not familiar with this, here's a quick summary. Parabolic SAR is an indicator that chases price. It chases it up in upward moves. It chases it down in downward moves. And if price, and each day where there's not a crossover, it gets a little bit closer and a little bit closer and a little bit closer to price. Now, if price crosses over our parabolic SAR, the parabolic SAR starts moving in a new direction. So that's it. And what John Bollinger said is a potential exit here when we have an entry, like we did here on this bearish signal, we might look for the parabolic SAR to provide the exit. So for our bearish trader here, they might have looked at price crossing above the parabolic SAR as their exit, like right there. Would it help if I zoomed in a little bit more? Let's zoom in a bit more. So here's our entry as price falls below the lower band after a 6-month squeeze. And then we start watching the parabolic SAR. Down it comes, 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 and price goes above. Our parabolic SAR point drops below price. That's our exit signal. All right, there we go. So that's going to be our plan for this trade. But first of all, we have to find these things. And that's what can be hard, because in my experience, this only happens about 1 day out of 100. It's a pretty uncommon signal. So having a scan to look for these things can be really a big improvement on efficiency if this is the way that the trader trades. So let's go build a scan. So let's go to the live platform. This is just a demonstration live platform, but we're going to be using study filters. So let's close out some of these stock filters that are just on the default. By the way, all I did here is I just click reset so that we're starting right with a basic scan template. Okay, let's close these ones out. Let's run a scan for this example. Let's just run it through the S&P 500 companies. And we're going to need 2 filters. So let's add one for for our first study. Let's add one for our second study. And let's build this. So the first one's going to be for Bollinger bandwidth. The second one's going to be for Bollinger %B. And let's do a custom study right over here. Let's remove the ADX crossover. And the first condition that we're going to look for is going to be our Bollinger bandwidth. So let's choose Bollinger bandwidth. And specifically, we're going to be looking for the bandwidth line, that's the green line, to be equal to the squeeze line. That was the dashed purple line at the bottom of our chart. So let's look for bandwidth to be equal to our study. Let's go for Bollinger bandwidth. But in this case, we're not looking for the bandwidth to be equal to the bandwidth. We're going to be looking for the bandwidth to be equal to the squeeze. In other words, the bandwidth has gotten down to that lower line. But we do have to make a quick modification to both of these. If I scroll up here a little bit, you'll see here is the bulge. We're going to make that 126 instead of 150. That's the number of days in constructing the indicator. We're going to make this one 126. We don't have to do this. This is the nitpicky stuff that I'm showing you just because, you know, for some traders who are purists and they're looking for more precisely getting down to at least 6-month lows. The requirement isn't to be 7-month lows, which is what 150 is closer to being. Let's do 126 here on both sides, and we're going to click save. Oh, actually, no, sorry. One more thing. Let's not require that the bandwidth be down at the squeeze level right at this moment. But how about at least within the last 10 days or 10 bars? There we go. So let's click save and let's click OK. Just out of curiosity, what if we were to do this? I'm going to run a quick scan just with that. How many of the S&P 500 companies have had a squeeze at 6-month lows, or that's the narrowest squeeze within the last 6 months, and that's happened within the last 10 days? Not a lot, 42, less than 10%. Let's see if NVIDIA has a squeeze like that, since it's the first one on this list. Look at that. Is our bandwidth at or near 6-month lows? It sure is. Are we getting very narrow squeezes? Yes, we are. All right, that's cool. So this is so far, it's doing what we intended it to do. So that's the setup. Now let's look for the signal. Let's add our second study filter. And here we're going to use, let's delete this one. Let's add a study. In this case, it's the Bollinger, pardon me, %B. And in this case, let's look for the %B to be crossing above. Let's see, crosses above a value of 100 within the last 3 days. What does that mean? Well, if our %B, which is, you know, the percentage range of price compared to the Bollinger Bands, if it has hit a value over 100 within the last 3 days, that means it has a bullish breakout within the last 3 days. Let's click save. Let's click OK. And that's going to be our second requirement. And out of these 42 companies who have had a very narrow squeeze within the last 10 days, how many are breaking out within the last 3? Let's see. Let's click a scan again. And we have 5. All right, guess what's right there? Guess how I found CVS? That's the scan. So let's save this scan. Oops, wrong one. We click on this menu. Let's save this scan query. We're going to call it Bollinger Breakouts. I'm going to save that. And what I'll do here, let's share this scan query. Let's share that. And I'm going to pop that in the chat. with a reminder that shared scans are not guaranteed as to timing or accuracy. But with that link, you can actually pop the link right up here in the top right. Just click Open Shared Item, put that link in here, click Preview and Import, and then that will show up in your saved scans, and you can load that scan. All right, let's run that scan again, and let's pick a stock. How about we look at these next two? I don't know what's going on with MNST or TSCO, so let's see. Here's MNST. Let me clear off the drawing set. Did it have a very narrow squeeze? Is this the narrowest squeeze in the last 6 months? Yes, it is. Did we have a breakout to the top side? Yes, we do. All right, so there is a legitimate, according to the terms of the definition of this trade system, there's a breakout. And then we also had one, was it TSCO, Tractor Supply? There we go. Look at this, a narrow squeeze with a breakout above that 100 level. Yep. Which one should we trade? What do we think, guys? We're going to use our parabolic SAR as our exit. How about we do, let's do Monster. Let me go back to Monster. Okay, there's our breakout. Let's take an entry. Let's go buy some shares here. We're spending more money on these trades than we had been previously. 100 shares would be $8,100. 200 shares would be about 16,000. Chintan, you like that? Is that a cool little search? Very good. All right, but let's click on the ask price. Maybe we'll buy 200 shares. $16,000. In this $200,000 portfolio, it's going to be less than 10%. Let's put it in a market order in this case. Obviously, a market order carries risk. We may not be thrilled with the price that we pay. It's not a guarantee of a entry price. Let's click confirm and send. Buying 200 shares of MNST. I'm going to send that off. Should get a quick fill here. And there it is. In that trade, guys, we've accomplished what I set out to do today. I think that was a fun one. We covered a lot of territory. This might be one you want to go back and revisit on the archives. But we used 3 Bollinger Band studies to address a common issue when trading just Bollinger Bands themselves. That is, how do we identify a squeeze? And once we know how to identify it, how can we even find it? That's a big deal. All right. So hopefully that was helpful to you. I'm going to let you go, but as I do, just remember that you have a great slate of resources available to you from Schwab Education. So first of all, if you haven't subscribed to our Trader Talks channel just yet, I would suggest you do that. You can pop down below the video right now and click on the subscribe button. It only takes a second, doesn't cost anything, but that's where you can join our live streams and you can find our playlists, including this webcast is scheduled to be added to those playlists very shortly. Now, I would also suggest you follow your favorite Schwab presenters on social media. So you can find Scott on social media at Scott Thompson CS. You can find me and specifically on X. You can find me on X at Cameron May CS. Now, as of very recently, you can also follow me on LinkedIn. Just go to linkedin.com/in. That's a typical prefix. And then /Cameron May CS. CS for Charles Schwab. Give me a follow there. I'm very active on both those platforms. If you reply to one of my posts there, I just try to reply right back to you. It allows for interaction when the camera is not on. Now, another thing I want to say thanks for all the thumbs up. Everybody that's clicked the like button, looks like about 200 people watching live right now. 76 have already clicked the like button. Thank you. That's really appreciated. It's applause to your presenter. It also gives a little boost to my YouTube algorithm every time somebody clicks the like button. Helps more people find these discussions. So there might be some Bollinger Band traders out there who's struggling. This might help. So thanks for doing that. All right, one final reminder, if you haven't done it already, click on that survey link in the chat. Fill out that survey. If you do, I will read through that data. I read through your comments. It's always helpful. All right, everybody, thanks for giving me your time today. Go have a great weekend. Scott, thanks for helping out. Definitely appreciate it. I will see you all in a future webcast. I'll also look for you on social media, on X and on LinkedIn. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.